Hello guys, how are you all doing? Well, in today's video, we're just going to be talking about, there's a question that I got on TikTok, which is about trading sessions and how do you trade in relation to the sessions. I'm sure if you've been following this channel, you would notice that I've never even mentioned the sessions ever since we started. But if you're new here, just make sure that you subscribe and hit the bell icon. So I'll give you the reasons why I never, my opinion about trading sessions, right? So let's say I know there are a couple of sessions. Some they will say New York session, Tokyo session, this that, but to me they don't really matter that much because there are people that are obsessed with sessions where they'll be like during this session there's a lot of volatility, this that, but now the problem with looking at approaching trading like that is that you'll be very obsessed. Every time that session approaches, you always expect volatility. If it doesn't happen, you'll be taking trades and you'll never know which direction the thing is gonna push towards. It's like the fundamentals. That's why I don't predict. Trying to predict where the fundamentals are gonna take your thing. It's more like you're gambling because you get the information online and you can say, yeah, based on this information, I think it's gonna go up, and then volatility, especially during the times when the volatility is that crazy, you're trying to sort of like catch a knife that is falling. It's not easy, yeah, man. So the trading sessions, we normally don't even mention them on this channel. The reason being that I teach you how to read the market structure, and then you'll be able to sort of pick the time frames that you like, and then you analyze both of them, right? And then when you have decided on the direction on them and how you're going to execute trades, you need to know where you're going to execute in the direction that you think those two time frames are headed. If they are going up, you're thinking of buying. Now the next step will be identifying the key areas of support, a key area of support where you would look to take trades in the upside direction. So that's how you trade. So if, let's say, there's a session that's starting at, let's say, at 12 midday, right? And you at 10 you get your reason to buy, which is like two hours before that you get your reason to buy, and then the price moves up. Let's say it is there by the time just before the session starts, and then maybe let's say it has given you 2:1, and then you decide to move to break even or to close half. So you don't even know, like, there are people, look at the price. It has already moved like this. It has already moved from here to there. That's the move that you caught, right? From this support, you caught that. So someone, already the price has moved like that, they are always expecting some volatility around 12, but they don't know the direction. So when it gets there, the price forms one green, slightly green, at two, slightly green. They think it's going up, they go and buy. You see, that's more like you're just guessing. There's a green color, but yes, it does not mean you're going up. It does not mean the trend is to the upside. Already, the person that traded the zone has made their thing. So sometimes you'll find that you entered at the zone, and then when that session that starts, and you don't even know what time it starts, you just see the price now making strong candlesticks in your direction. You'll be like, oh, okay, now this is pushing nicely. You see, you are trading the zones, and sometimes the sessions are just there to sort of complement or to finish off the setup that you had. But if you become too obsessed with the sessions and not the skill, you're going to have a problem, simply because you'll be chasing the volatility that happens at those sessions, but you don't even know how to take advantage of that because you are just waiting for the price to sort of quickly move in one direction, and then you're going to go in. When the volatility is crazy, price can quickly reverse before going up. It can just move sideways, or I'm sure you have seen price doing something like this around, let's say, around 15-hour 30 on daily basis. I think that's when the US stocks open or something. There's a lot of volatility around that time. So some people, when they see, maybe they will open like the smallest time frame, they'll open M5, and then when it hits 31 and they see sort of the candlestick that's there is green, they go and buy. But you can see the price doing this 15 minutes and then doing that 15 minutes, or just doing this because the volatility is just crazy. The volatility is just crazy. That's why I don't want to obsess myself with the sessions. So I'll just trade. It doesn't matter what time. If I see a setup, I see a zone, I'll buy at that zone. I'll buy at that zone. And most of the time, you'll find that the price would just, the volatility from that session. I don't even know it's a session, but I know there are different sessions. I'm not sure about the times. This session starts at this time, that, and stuff like that. I don't care much about that. The only thing that I take into consideration are the fundamentals. And still, even the fundamentals, I don't trade them. What I do is that I try and not go against them, but I don't trade exactly. When you're saying at this time there are news coming out, and then I trade that, it's very risky. You'll find that I entered a long time ago, or maybe sometimes you'll find I'm waiting with a sell there. I'm waiting to sell there. The price is here at half past 3. It's somewhere here, and then you don't even, the problem with when you obsess yourself with the sessions, you won't even take the area of resistance into consideration. So once you see your blue color or your green color, you are buying, and you find that the price just does this for a few minutes and it hits the level that we've been waiting for, and then it comes down. You are crying. You are crying. You know why? Because you are only chasing what? You are chasing the volatility and not the skill, or not the market structure. But if you read the market structure, most of the time you'll find that volatility that you're getting during the sessions, it's just there to complete your setups. So that's why you should just focus on the skill. Focus on the skill. Focus on checking the structure, and not necessarily. Sometimes you'll find that some people, even at the time when the session is starting, like, you are just buying because of the color of the candlestick. Like half past 3, you be like, they know there's a lot of volatility around half past 3, but the way they are buying, you can see that this person did not analyze. They didn't. They are just buying. You see. So that's not how I would encourage you to do things. Yes, it's nice that you know the sessions and stuff like that, but don't be obsessed with them. Don't be obsessed with them, because if you're obsessed with them, you will end up trying to force, thinking it's a must for you to always execute when that session starts. But you find there's nothing. There's no setup. There's nothing. But because it's a session, it's starting. You feel like you're forced to execute. So you end up taking unnecessary losses. You see. So if it works for you, you can continue with the sessions. But here, if you've watched, if you're new here, or if you've been with us, you know that the sessions I've never even mentioned them. I've never, because I don't feel like they're that important, because people end up being obsessed with them, and they feel like they are forced to take trades during those sessions. It's okay to go for the whole day without executing. It's okay. But when you're trading, when you're always obsessed with the sessions, you wouldn't let the day pass without you executing anything. You'll be forcing trades at that session, and sometimes you'd find that there's no volatility at all. You went all in. The price is just moving sideways. You're disappointed, but at the same time, you don't want to close because of what you have a small loss there. It's running at a small negative, so you're just hoping that it will move to the positive so that you can close some of your trades, and then it starts moving in the opposite direction. You see, if I ask you why you entered here, you'd be like, it's a bargain. It's the opening of what session. So I was expecting the price to go up, but yeah, if it works for you, you can use it, my guy. But here we're not gonna be stressing yourself about these sessions. We are trading the structure. So if we see that the structure is saying we're going to buy, and the session, your session is starting on the other side, and then if it moves, if there's a high volatility in the direction that we wanted, it's not because we were trading the session. No, it's because we were trading the structure that we saw there, and then the volatility that came with your session, it just helped complete the structure. You see. Don't have to be obsessed with sessions, my guy. Don't have to. And I'm thinking, I'm only mentioning it once. I'm not ever gonna mention it again. Why? Because we don't use them this side. We don't use them. All right, guys. I'll see you in the next one. I just wanted to address this issue of sessions because I thought it's something that is worth sharing. But that's just my opinion. If you you are someone that's been using the sessions and it's working for you, then you can continue like that. But here you'll never hear me mentioning it again. All right, guys, I'll see you in the next one.